What's up, guys? Monero Matt. First video. And sorry if things are a little bit sketchy. I'm trying to work on it, but first video, don't expect too much. But there is some solid critical information that you're going to need out of this video and out of future videos. So please hit the like button. Please subscribe. This is going to be a channel that is very much oriented towards privacy coins. And if you don't know what those are, we're talking about Monero, Pirate Chain, Darrow, PRCY Coin, Haven. Those are my top 5. But these are going to be incredibly important going into the future. We're going to read some articles here. I have no introductory video to do. We're just going to jump into the news. But I want people to understand that there are more risks in Bitcoin and in some of these public blockchains than I think was previously expected by a lot of people. A lot of people, they're just blinded by the gains, and I don't think they're taking a very holistic approach to realizing what's going on around them because we're moving into a technocratic, totalitarian situation. And if you have your money on the system, if you're on the grid, which you are if you own Bitcoin, if you own Ethereum, they are employing many firms. One in particular that you may have heard of is called Chainalysis, which is very much focused on figuring out who owns what and who's transacting with who and who's buying what on the public blockchains, whether they be Cardano, whether it be Bitcoin, whether it be Ethereum. Now, I like these cryptocurrencies. I do like them, and I like the idea of cryptocurrency in general. But here is where I'm coming from. I think that, A, you are going to have to do battles with the sovereigns in order to make these things work. 2, let's say that you win the battle and there is widespread adoption of Bitcoin and some of these other cryptocurrencies, you're going to be paying significant tax on them, especially if they want you to be using central bank digital currencies, such as the digital yuan renminbi or the digital US dollar, both of which are in development. I think the renminbi is actually in circulation now over in China, but it wasn't really well received, and so they're going after other online payment systems like the Ant payment system, the Tencent payment system, and some of these other ones. And I imagine the same thing's going to happen in the United States. And you see in China how they crack down on Bitcoin, how they crack down on cryptocurrency. And so we may see the same thing in the United States. And the argument is, okay, well, people are just going to go to El Salvador, they'll go to some of these other places. But you're not going to be able to get out of the tax system. They're going to understand where your wealth is, how much wealth you have. And I don't think that people fully recognize the risks of this, especially as we move into a world where we have global wealth taxes, wealth taxes in general. I meant to say global minimum taxes. It's a new thing that corporations are currently paying, which I predict is going to move down to the individual level, whether it's in the form of carbon taxes or whether it's in the form of something else. But everyone's going to be paying more taxes here into the future, especially as they pass more and more legislation, more and more bills that they can't afford. So this is something to consider. And I am a fan of private cryptocurrencies. And I'm seeing many things. I'm a tax accountant, just so that you know my background. I study the tax system, the tax law in the United States. I have an accounting degree. I do individual and business income tax. And so I know a little bit about taxes. And I don't think that a lot of people in the cryptocurrency sphere understand taxation too much. And I think this is going to get them in a lot of trouble, compounded by the kind of society that we're going into. We'll talk about that in a little bit. But I wanted to go through some articles today so that you guys could understand where it is I'm coming from. Because there are some trends that you're seeing, particularly today, which I think are going to become ever more pronounced. So I'm going to try to minimize my box. Okay, there we go. New infrastructure bill. So this is on Yahoo Finance. And they're looking to raise $30 billion through crypto taxes. Now, to pay for the infrastructure bill, I mean, we're talking about $1 trillion, $1.5 trillion. I'm not sure how much it is. I don't think they care. I don't even think they know how much it is. But it's not that much in the grand scheme of things. But it shows you their intentionality to milk the cow that much more, and to look at people who own cryptocurrencies as a tax base with which to parasitically draw from. And when cryptocurrency first got started, it was started by, well, I don't know if it was started by, but it was definitely promoted by a lot of anarchist, libertarian, renegades like John McAfee and Jeff Berwick and people like this, who got incredibly wealthy from this. But the initial intention with Bitcoin and a lot of these cryptocurrencies was to have an alternative payment system, which was decentralized, which was publicly verifiable by everybody in the system, which was limited, which was private, most importantly. It was supposed to put the power of the purse back in the private individual, in the private sector. And now that we're seeing adoption by governments, there's this weird thing going on where a lot of people are seeing this as a positive development. And I got a little bit nervous when I saw Jack Dorsey and other people come onto the scene. Jack Dorsey, of course, being the CEO of Twitter, who is the great censor of our time. I mean, he even banned Donald J. Trump from his platform. I mean, just think about that. Think of the power this guy has, and think of which side he's on. And you have other people like Elon Musk getting into the space. Elon Musk is a total globalist. And I'm concerned that it has been co-opted. And there have been developments over the years regarding Bitcoin. At first, it was supposed to be a cryptocurrency. And the whole idea of a currency is that it's cheap to transact, it's quick. Well, the developments that they did with Bitcoin ended up making it a little bit more expensive to transact, especially when the transaction network gets clogged. And it's not as fast as you would otherwise need it to be a cryptocurrency. And so, the idea is people would use Litecoin, people would use other coins which are faster to use during the day, and maybe Bitcoin would be used as a way to settle business transactions. But nevertheless, it's being adopted by governments. Now, if you hold Bitcoin, this seems like something that's fantastic because look at the gains. Wow, it's like if governments start to use this stuff, just imagine how much money is going to go into all this. And, people are looking at the bond market, which is just totally worthless. I mean, you've got like $100 trillion of bonds out there, which are yielding negative in real terms. In many cases, nominal terms, which is even more crazy over in Europe and Japan. But let's just take a look at this, right? So they're looking to raise $28 billion from crypto investors. And what people should know as just a basic thing is that Bitcoin and these cryptocurrencies are taxed as property. And so if you transact your Bitcoin for something, say you buy a pizza, say that you transact your Bitcoin for another cryptocurrency on an exchange, that is effectively you selling property, just as you selling a house, just like you selling a car. You realize, actually, a car is not the same thing. You can't take deductions or mark gains on cars. But you take, well, I guess you can't gain. They'd probably, you just can't take a loss because it's a personal item. But you have to pay capital gains taxes on that. Now, it's long-term or short-term based on how long you held it. But these are regulatory burdens. Even though it's probably not too hard to calculate your gains on this, these are things you have to take into account. And also, these are things which very much make it inefficient and not useful to transact with. Because if you're transacting Bitcoin, well, if you have to pay a 20% tax on the gain, the appreciation of the currency with which you're using to trade, that's overhead right there. And even if, you're thankful that the currency appreciated in value against what it is that you're buying, you still have to report that to the IRS, and that creates an extra burden, which is a cost in and of itself. So digital assets added to the current rules, and businesses are required to report cash payments of $10,000. I think I read this a while ago, and when this was announced initially, you had Monero and other privacy coins significantly increase in value. But just imagine you're a business, right? You're a big corporation. You are transacting well over $10,000 all the time, and you're using Bitcoin to settle payments. Well, just think again of the regulatory overhead that's going to be involved in using this, right? I mean, I'm not sure if it's going to be like payroll deposits where you have to, depending on the amount that's being paid out or the amount of tax you have to deposit, it's daily or weekly or monthly. I'm not too familiar with that, but that's something else to consider, right? The crypto reporting requirements are among a list of 14 new pay-fors included in the bill. So, new sources of revenue. Noticeably in here, the Federal Reserve is not listed as a pay-for. And the Federal Reserve, I think, is at this point financing half of the government's deficits. So we're heading well towards hyperinflation. Okay, so it's $1 trillion. Just throwing more fuel on the fire. And I think Jerome Powell and the FOMC came out yesterday and they said that they weren't thinking about raising rates. And furthermore, they weren't thinking about tapering QE. They're still going to buy $120 billion every single month of mortgage bonds and U.S. Treasuries to keep the system afloat. And if they stop doing that, it's over. And it's been calculated, actually, that the real rate on the U.S. Treasury, according to Deutsche Bank, is about negative 4.5%. Now, the 10-year U.S. Treasury is the benchmark Treasury, the benchmark financial instrument, which is used for establishing rates on car loans, mortgages, and many other things. So if it's negative, that means that the time value of money is essentially negative. And if you're watching this, you barely have to understand this. You know that the money is worthless, and it's just a matter of time before the market realizes this, and trillions upon trillions of dollars of capital just flood into gold, silver, cryptos, you name it. But that doesn't mean the government's going to cease to exist. They're going to look for these things to tax, and if you have physical gold and silver, if you have privacy coins, you are going to be off the system effectively. Now, I'm not saying that you shouldn't pay taxes. I'm just saying that you're off the system. People have unfortunate boating accidents sometimes, and, they have their gold and silver for whatever in the boats, and then they lose the gold and silver. Things happen, right? So this article is kind of a cope, in my personal opinion, and I love Zero Hedge. I think they have great information, but it seems to me to be somewhat of a cope. Because the whole idea here is, now that the Senate has agreed to use Bitcoin as a taxable piggy bank to pay for billions in pork, it means that Bitcoin isn't going anywhere, and it certainly won't be regulated out of existence, which has long been one of the big existential risks facing the space. Now, I don't agree with this. I don't think that they have the central bank digital currency ready. And so, of course, they're going to tax it. Of course, they're going to take in some revenue from this crazy token trading which is going on online. And why wouldn't they? They seek to tax everything and make it worthwhile for them. But if they come out with a currency which is threatened by Bitcoin, one thing that they can do, which would totally nuke the public blockchain industry, like a Nagasakian bomb, is unrealized capital gains taxes. A lot of people aren't talking about this. I've heard rumors about it. I've spoken with intelligent people about this in the industry. It would decimate the industry like you wouldn't believe if you had unrealized capital gains tax. Now, if you don't know what that is, that's basically, okay, you buy Bitcoin in February. Maybe it's $10,000. At the end of the year, it's at $60,000. So you made $50,000 in unrealized capital gains, assuming that you haven't sold your Bitcoin. Okay. That $50,000 in appreciation, if they pass these unrealized capital gains tax laws, means that you're going to have to pay tax on that $50,000 of capital appreciation without selling the coin. And so if that happens, people are going to lock in their gains. As volatile as cryptocurrencies are, with the risks that are already involved in trading this stuff, are you going to risk holding on to one of these volatile currencies through the year end, pay the government your gains, and then hope that it doesn't go down significantly in value to where you just wasted all this money paying the government, which who knows, maybe you don't even have the liquid capital to pay the government the tax on these incredible gains without selling your coins, which adds another reason for people to sell their coins because they think other people are going to sell their coins in order to pay the taxes on these unrealized capital gains. And so you have so many reasons to sell, and that's going to create more problems, right? And people are like, man, that's ridiculous. Why would they do that? I mean, they can't just do that. They can't just pass unrealized capital gains tax for one sector of the capital markets. These people will do anything. Like back in March, on my birthday of last year, March 23rd, they essentially nationalized the corporate bond market. Do you remember that? Does anyone remember that? When the Federal Reserve started to buy Apple bonds and Amazon bonds? I think they even bought Hertz bonds, if I remember right. And Hertz was bankrupt at the time, and they were buying the bonds in order to liquidate the markets and keep everything up. Crazy. So they'll do everything and anything. And if 2020 didn't prove that to you, I don't know what will. So you just have to expect, as a rule, that they will change the rules if it fits their favor, right? So, in other words, and this is good news, nothing has actually changed when it comes to the tax treatment of Bitcoin, but what has changed is that by requiring the taxation of Bitcoin as a core anchor of the bipartisan spending bill, we can now forget a worst-case scenario that sees regulators stomping away the nation's space. If anything, one can argue that in hopes of generating even more taxes in the future, Congress will not only facilitate transactions in cryptos, but will also make it easier for the broader public to generate profits, i.e. taxes. It's such a cope. It's such a cope, in my opinion. Such a cope. I don't think so. I think the government, this comes from the presumption that the government cares more about money than they do about power. And I don't think that's necessarily true. So here is a 1040 U.S. individual income tax return. And they're now asking you, if you don't know this already, that if you had anything to do with cryptocurrency, selling, sending, exchanging, acquiring, you have to check a box that says, yes, I'm involved in this space, which essentially says, put me on the grid. Put me on the grid. And they will take an extra look into you. And I suspect, this is just a prediction, but I suspect the day will come when you have to identify which wallet is yours. Now, the government's already, I think, well involved with exchanges like Coinbase, exchanges like Binance. And if you own cryptocurrencies or have purchased cryptocurrencies on these exchanges, which are KYC exchanges, otherwise known as Know Your Customer exchanges, they know that they know what you're doing, right? Last article of the day. Israel government seeks to track crypto holdings above $61,000. And they're looking to get more taxes, but ultimately this is about control and waging a war against black capital. Right. Because that doesn't happen with dollars, of course. The Israeli government is ratcheting up its efforts to deter tax evasion and close loopholes for would-be money launderers as part of a war against black capital. Among the measures outlined in the new draft bill published by the Ministry of Finance this week, a new statutory requirement is being proposed to place cryptocurrency users under increased scrutiny. The proposed law would make it mandatory for cryptocurrency users who have either purchased who have purchased either $61,000 worth of cryptocurrency or whose cryptocurrency holdings are currently worth the same amount and above to file a report with the Israeli tax authorities. So if at any point during the year in Israel, if you have over $61,000 in cryptocurrencies, you have to file a report and put yourself on the grid to the Israeli authorities. Now, what happens when you do that? Well, according to a report from an Israeli newspaper, the marker Meni Rosenfeld chairman of the Israeli Bitcoin Association, wrote a letter to Israeli tax authority head Iran Yaakov earlier this week. He argued that the extensive reporting obligation would create a database of Bitcoin holders, something unprecedented compared with any other asset. See, as I was saying last time, they will do whatever. Let me just make sure I'm still recording. Okay. They will do whatever to stop things which threaten their power and their control, even if it singles out a particular asset, which is weird in regards to legislation, but they'll do it. If it involves establishing unrealized capital gains taxes against one particular asset because they deem that asset to be dangerous, they will do it. Or they'll just straight up ban it. They'll say you can't have it. Now, I don't think that's going to happen because they'll completely cut themselves off from taxes. It'll go underground and they won't get any taxes. But this is just evidence that governments are going to do whatever governments are going to do in order to look after their own interest. Rosenfeld further argued that due to the price volatility of digital assets, crypto investors could qualify for a reporting obligation 1 month and then soon after falling below the threshold. Right. Exactly. He wrote that the decision to hastily make this amendment to the law without any dialogue or understanding of its implications drastically impairs investors' rights to a hearing and compromises the effectiveness of proposed legislation. I don't think they care about your rights. Okay? You buy Bitcoin. You buy Bitcoin because you know the government doesn't care. They're running massive deficits. They have central banks which print funny money out of thin air by the trillions. And you think they care about you? I know he's arguing a case to the government, but come on, we all know better, right? Israeli Daily Globes also cited Rosenfeld's objection that the law would unduly discriminate against Bitcoin holders, as well as framed them as potential criminals. So you're going to be on a list if you send in this report. And just as I was saying, you're probably going to be on a list somewhere if you check this box. In his view, the proposed measures go against the grain of easing access to digital economy more broadly, a market that already faces significant regulatory challenges. Tax lawyer Itai Braca told Globes the law was another aggressive step taken by authorities towards becoming Big Brother. Right. Yes. Bitcoin is great. It's limited, which is a much better system than the central bank centralized dystopian nightmare we have now, where they can just print trillions of dollars, send it over here, print trillions of dollars, send it over here. There was a lady even talking about just sending money directly to the consumer from the Fed, just totally bypassing the banking system, totally bypassing the government. And if you're not aware, the Federal Reserve note is a liability, and it's used to purchase assets. That's how money comes into the system. Typically, they buy either U.S. Treasuries or mortgage bonds. And when they purchase those assets, the liabilities, which is the U.S. dollar, comes into the banking system, which then circulates through the economy. Not really. Ostensibly, that's supposed to happen. But in many cases, they just go into the capital markets, making the rich really rich, while the poor guy pays the inflation tax because the dollars that they spend are debased and devalued. But where was I going with this? But here's the deal, right? The big thing about Bitcoin and the big thing about a lot of these public blockchains is that you're on the grid of a government which is becoming incredibly totalitarian and is becoming incredibly, some would say, satanic and aggressive. And, you know, I mean, there's a lot of talk about white supremacy, nationalism. I'm not sure what I'm allowed to say on YouTube, but there's a lot of talk about certain people of our population and how it is they don't like to take jabs, how it is they go to church too often, how it is they inquire into certain things. And the government doesn't like those people. If you look at the people who got arrested for what happened on January 6th at the Capitol, look at how those people are treated. And then look at how the people are treated who burn down cities all over the country. But if you say anything about those people, the government wants to come after you. And if you have your money on the system, if you have your money where they can see it, now, all this stuff about the FBI seizing funds, I don't think that actually happened. I think they did some other mechanism, although they have seized the funds before, which I'm not sure of the mechanism of how they do that. Maybe it's like some Saudi Arabian style. We're going to string people up at the Ritz-Carlton, beat them until they tell us how to get into their wallets, but I'm not sure. Like, if they know you have money, they're going to come after you, especially if they consider you to be an enemy. And if you are online or if you are in their database as somebody who is libertarian, somebody who thinks taxation is theft, somebody who thinks that the government and this current administration is coming against them in ways which are concerning, then they could say, we think that you tried to not pay your taxes on this particular transaction, which we found because we have access to all of your transactions. That's the joy of a public blockchain. Once we figure out which wallet is yours and we can see all of your transactions, looks like you forgot to report a couple transactions, or did you forget? Maybe you intentionally didn't because you didn't want to pay this tax. And, based on your beliefs, I think you probably meant to evade taxes, in which case you're going to jail, right? This could very well happen. And I don't think people are aware enough of this reality. I think people are blinded by the gains. People are like, we're going to the moon. They've got the laser eyes. I mean, they don't realize how ominous this public blockchain idea could be. Now, I like a lot of cryptocurrencies that are on the public blockchain. I particularly like Cardano. I like Algorand. I like Ethereum. I like cryptos that give me a yield, number one. So if I hold it, I can get a return. I think Cardano grants you 5%, Algorand around the same thing. But they also have different use cases as well. Cardano is being used in Africa for many different things. One is for grading systems. They anticipate Cardano, the infrastructure, being used for establishing integral election systems. It's more than just fintech. But Bitcoin, it just sits there, and you're on the public blockchain. And this, to me, is concerning. And the solution to this, if you want to have privacy in your currency, is to get exposure. And I'm not giving financial advice, but this is what you would do if you were concerned about the things that I just mentioned. You would get into private cryptocurrencies. You get into Pirate Chain. You get into Monero. You get into Darrow, which is like the private version of Ethereum. Not many people know about it. It's still relatively young. Haven, it's another interesting one. They've had some issues recently, so I can't advocate for them to any degree. But what a very interesting idea they have. I mean, their idea is to have a private stablecoin where you get exposure to the price movements of the US dollar. They're linked through Chainlink, which is a cryptocurrency oracle, which connects financial data from outside of the blockchain to the blockchain. So with Haven and Chainlink working together, you can get exposure to what you call X assets. You can get exposure to Bitcoin. You can get exposure to gold and silver. You can get exposure to other stocks, which they're working on, the price movements thereof, without being on the grid. And you have great developments in this space. And the website I'm on right now is Trade Ogre. Frankly, I don't know what's going on with this website. As far as the legality, I don't know if this is hosted in the Caribbean somewhere. I would have thought it would have been shut down by now, but hence it's still here. This is a place where you could get countless numbers of coins, which may be difficult to get in other places. But I think all these could actually be purchased on some other exchanges like Qcoin and such. But these coins, I'm telling you, as sure as I'm sitting here, are going to go through the roof. when people start to figure this stuff out. And I remember I looked. Am I still recording? I have to. Okay, yeah, we're still recording. But I looked. When I first started to piece all of these things together, I looked and I was like, is anybody else talking about this? Has anyone else come to these conclusions? Because for me, it was like an epiphany. You just had so many things coming together. Like, for instance, you have the global VPN market is about $30 billion. Okay? That's for going on the internet and doing things privately. Okay? It's about $35 billion. And it encompasses like a third of all the people who are on the internet. I mean, that's a lot of people, right? These people are going to want private money. And if you look at Monero, the market cap is $4 billion. For Pirate Chain, I think it's like $500 billion. And for the other ones, it's even less. This is such a nascent industry right now. It's going to be humongous. I think Monero could get to easily $10,000 a coin. Does that sound hyperbolic? I don't think so. I think Pirate Chain could get to $50. It's at about 3.5. It's just a no-brainer to get onto these privacy coins, which are anonymous. You can't be tracked or traced. The government doesn't know what you're doing with your money. And I'm not sitting here advocating you do anything illegal. I'm not sitting here advocating that you don't pay your taxes. As a tax accountant, I have to advise that you pay your taxes. As do I. I pay my taxes on cryptocurrency. But I'm telling you, there is going to be increasing incentive to use these things. And the global black market, as it increases, because inflation is going to cause shortages of goods. And look at how Nixon approached inflation back in the 1970s. He instituted price controls. Well, price controls beget even more shortage of goods. Because, I mean, if you don't know how Austrian economics works, if you have a consistent demand for a particular product and the price is capped, that is, it's not allowed to fluctuate naturally with the demand of the product. That is, if you have ever dwindling supply, but the demand stays the same, the price has to go up so fewer people can buy this shorter supply. This is how it works. But if you limit that, which happened during actually the pandemic of 2020, people are going to stock up on these things, and then they're going to sell them in the black market for a tremendous price hike. And this is going to be illegal, of course. And so what do you think they're going to do in order to transact in the black market? They're going to use a black market currency like Monero, which is currently the currency du jour of the dark web. They don't use Bitcoin anymore. Everybody is aware that Bitcoin is a surveillance coin. You can be tracked and traced using Bitcoin. That's how the Silk Road got taken down. But, oh goodness, nobody sees this yet? Nobody sees it? It's unbelievable. Monero, now this is what Jeff Berwick says. I'm unsure. And by the way, Jeff Berwick was the only other person that I found that understands this. And Jeff Berwick got into Bitcoin at $3. He got into Ethereum at $1. He gets this stuff, okay? He sees the trends. And he knows other people who got in really early who are trying to get out of Bitcoin and some of the other public blockchains into these private blockchains because they are that convinced, A, these are going to be the big things, and B, if you are a criminal and you do illegal things and you don't want to pay your tax to the government, all of your gains that you get from the appreciation of these significantly undervalued assets, if you're a criminal, it's highly doubtful you're going to be paying those taxes. As far as I'm concerned, the government doesn't have a way of figuring out who you are and coming after you for those taxes, right? Again, not advocating that you do this, but this is just the way it is. So I'm going to make more videos about this because clearly this is important. People have to know about this. And the true financial revolution is in these privacy coins. The true financial revolution. Because we're moving into, again, a totalitarian technocracy. And if you want to have any chance, I am a Christian conservative, okay? I'm concerned about my future in this country and in the West in general. I don't need to go through the things that are going on. If you are a Christian conservative or if you're just somebody who gets it, I don't have to explain this to you. And so for me, obviously, I want money that can't be seen by the authorities that hate me and want to kill me and destroy my life. Makes sense, right? And so I think the privacy coins are going to be huge. What we're seeing is just the beginning. And the last thing I want to point out is these coins are up so much today. Let me refresh, see where they are now. Okay, yeah. These coins are so up today, all these privacy coins, and this is relative to Bitcoin. They're up so much today, A, because they're small caps and they're going to move with more volatility relative to Bitcoin. If Bitcoin's going up, it's going to go up even more in many cases. But they're going up more relative to a lot of these other coins on CoinMarketCap, right? I mean, these cryptos are relatively stable. I'm not sure what Quant is. But Thorchain is also up. Thorchain, if I understand correctly, Thorchain is used as a way to do swaps between a lot of coins and privacy coins. Don't hold me to that. I haven't done the research. But they work with Haven, and they're trying to set up a bridge together so that you can exchange X assets for Bitcoin and some other coins. But you see these coins, right? They're relatively flat. But the coins like Monero, on all this tax news, look, 22% on the week, 2.87%. And then you got Pirate Chain, and you got Haven, and Darrow doing pretty well, right? So that's all for this video. Go ahead and smash that like button and subscribe. How do I stretch? Can I want to get full screen here. I'm sorry. It's just I'm such a noob when it comes to this stuff. No? Oh, I have to click on this first. I'm such a boomer. Transform. Stretch the screen. Hello. Okay. So go ahead and smash that like button. Go ahead and subscribe to the channel. I think we're going to have great content about this. And again, I am a tax accountant. I also do bookkeeping, also do payroll, and other financial services. So if you need any of that stuff, please come to me. Don't hesitate to ask any questions. If you are interested in the new academic field, which I think is going to be emerging on how it is Monero and other privacy coins are used by criminals to get around the tax system, that's something I've been studying, which is interesting, just because it's an interesting field of study as somebody who studies the tax code and somebody who's into private cryptocurrencies. Feel free to get in contact. We could have a chat, and I believe that is all for now. So you guys enjoy the rest of your day.